Pigeon starts panicking every time he watches the news. Apparently, the US economy is always one bad week away from disaster. That can't be true, right? Pigeon's mom says it's the AI bubble. Pigeon's dad says it's the Fed. And grandma says it's oil prices. So who's right? Maybe none of them. And sure, those things matter. But they still don't fully explain why America feels this weird right now. So what are pigeons missing? A big part of the answer may actually come from Japan. Wait, what? How is a country on the other side of the world supposed to matter this much here? For decades, Japan was one of the biggest sources of cheap money in the world, and the United States quietly benefited from that, way more than most pigeons realize. But that system is starting to change, and pigeons in America are starting to pay for it. So why was Japan even part of this story in the first place? Back in the early 1990s, Japan's giant bubble burst, stocks fell, property too, and the economy got stuck. So Japan kept doing the same thing: cut rates, make borrowing cheaper, and hope that gets things moving again. Like pigeon opening the fridge every 10 minutes, hoping something new will appear. Nope, same moldy leftovers. By the late 1990s, rates were basically at zero. Money was almost free. But even with money that cheap, the economy still felt weak, and Japan fell into deflation. That just means prices stop rising the normal way. Sometimes they even fall. And yes, that sounds nice for about 4 seconds. Cheaper stuff. Amazing. Best economy ever. But then pigeons start waiting. Why buy this today if it might cost less next week? Businesses get cautious too. They invest less. They hire less. And the whole economy starts feeling stuck. So Japan stayed in this ultra cheap money world for decades. Now think about investors. If a 10-year Japanese government bond pays around 0%, that's not much of a reward. So big pools of money started looking somewhere else. Because if money barely earns anything at home, the natural move is to send it abroad for better returns. So what did that look like in practice? Very simple. Borrow in yen where funding is super cheap, convert it into another currency, then buy something that pays more. This is called the carry trade. If funding costs you almost nothing and something else pays 4%, your brain starts acting very confident very fast. This is exactly how every pigeon feels after watching The Wolf of Wall Street. Okay, but what does that even have to do with the United States? US Treasuries were a natural place for that money to go. These are basically the bonds the US government sells to borrow money. And for global investors, they are one of the safest places in the world to put your money. It looked like a great deal for both sides. Japanese investors got better returns. The US got a major source of demand for its debt. And that's where this starts to matter. Because what would happen to America if that money ever stopped coming? So what changed in Japan? The country stopped acting like borrowing there would stay cheap forever. In March 2024, the Bank of Japan ended negative interest rates. Then in July, it raised rates again. For years, the world got used to one idea: Japan will stay cheap and that money will keep coming. And then Japan basically said, yeah, maybe not forever. But why is this such a big deal? Because Japan stopped being the same Japan everybody got used to, and we already got a preview of what that looks like. In the summer of 2024, the yen got stronger, and that was a problem because these investors had borrowed in yen. So when the yen got stronger, those loans got more expensive to repay. Each dollar bought fewer yen, so a lot of them rushed to get out before the trade got even uglier. It proved the system was fragile, like when the barber says, "Don't move," then you sneeze. And now you look like this. So America doesn't need Japan to dump every treasury tomorrow. That's the cartoon version. The real problem is smaller and way more serious. If less money shows up to buy US treasuries, their prices fall. When prices fall, yields rise. So the market has to offer a better return to keep attracting buyers. That means long-term borrowing gets more expensive, and that's why mortgages refuse to go down. Like your heart rate when your partner says, "We need to talk." So no, you don't need a giant fireball. You just need less easy money doing the same job it used to do. And to be fair, not all of this comes from Japan. America has its own problems too. Too much debt, sticky inflation, policy uncertainty, and all of that matters. So no, this is not Japan controls America. That would be stupid. Also a little dramatic, even for this pigeon. The real point is simpler. Japan can make the whole market feel more fragile right when everything else is already tense. They don't need to control the whole system. They just need to stop being the old Japan at exactly the wrong time for America. So what does this mean for pigeons like you and me? First, housing. A lot of pigeons hear the Fed might cut rates and think, great, mortgages should come down too. Not so fast. The Fed doesn't control your mortgage by itself. Housing depends a lot on the 10-year Treasury, and if that stays high, mortgage rates can stay high too. So the magic refinance window many pigeons were waiting for still doesn't open. The dream was, rates fall, payment drops, and life feels less evil. Instead, the payment just keeps staring at you like your dog when you open food. Housing is one of the biggest bills pigeons have, so when that stays high, you get less breathing room for everything else. And housing is just the beginning. This can hurt the stock market too. If that money from Japan gets less steady, we start getting those lovely days where everything is red at once. Tech down, indexes down, your confidence down. And you might say, who cares? That's just rich pigeons. I don't buy stocks. Sure, but your retirement money might. A lot of pensions and retirement accounts are tied to markets, so this can still hit you later, even if you never touched a trading app in your life. Wait, what if this hits grandma? What happens to my Christmas presents? Oh no, I'm getting socks this year too. So this stops being a story about traders and bond markets. Now it's just your monthly budget breathing through a straw. And it doesn't stop here. Companies feel it too. Businesses borrow money all the time to fund new projects, open new locations, buy equipment, or just keep expanding. And if that borrowing gets more expensive, they start acting differently. Some projects stop making sense. Expansion plans get delayed. Hiring slows down, and sometimes they even start laying off pigeons. And when enough companies all get more cautious at the same time, the job market starts breaking too. So this story hits housing, portfolios, your retirement, and eventually the job market. So what's the real lesson here? For years, America got used to a kind of cheap money that started feeling normal, but it was never meant to last forever. So no, Japan is not a bad guy. They did what anyone else would have done. The real point is that something temporary stayed around so long, pigeons in America started treating it like a law of nature, like gravity or taxes, or your mom acting like you still look handsome after that haircut. That was the real mistake. The system got comfortable, then it forgot it was comfortable. It took something quiet, useful, and long-lasting, and started acting like it would always be there. Like one of those friends who lets you use their Netflix for 3 years. After a while, you stop saying thank you, then one day it says, wrong password. Now you cannot even watch the new season of Stranger Things, and honestly, you cannot even be mad. That's basically what happened here. A world of unusually cheap money helped America for a long time. Borrowing felt easier, and markets loved it. And once that kind of comfort starts fading, the pressure shows up everywhere. That's the part pigeons miss. The price of money can change on the other side of the world and still make your life harder at home. So no, the loud headlines about AI, the Fed, or oil are not always wrong. But they are not always the full story either, because sometimes what looked normal was just borrowed comfort. Subscribe to support Pigeon so he can keep the future slightly less scary. Also, if you like this video, you'll probably like the one below. Do it for Pigeon.